Welcome everybody to this week's session of the Venture Outfitter Weekly. It's March 24th, 2022, and today we're going to be talking about investment readiness. I'll probably give a little bit of information through some slides, and then we'll kind of keep it casual and have some discussion. But if Jello, you can put up the slides, we'll start with kind of the intro. And today we're going to be talking about investment readiness. I'll probably give a little bit of information through some slides, and then we'll kind of keep it casual and have some discussion. But
are the slides showing up?
Yeah, okay, so let's go to the next slide. Go through to the next one. Just a brief mention again of our sponsor this week is DuoWorks, the co-working space. Talking to you guys from, and Kevin and I are headquartered and based here, along with other startups and businesses. It's a great location here in Austin, right at the intersection of 183 and Mopac, with great accessibility to pretty much anything and anywhere in Austin that you need to be or meet with anybody. We offer here, various packages for businesses in terms of both virtual and in-office kind of, location and co-working. So always let us know if you're interested, if there's an opportunity to get you a, mailing address here in the US or here in Austin, Texas, and a desire to have a presence. We're happy to put you guys in touch with the DuoWorks team, and we continue to enjoy being based out of here and working out of here, and look forward to seeing some of you in the future. We'll give another mention to our Venture Outfitter community and network. As you all know, we have this great platform on Mighty Networks where we've developed our Venture Outfitter community and network. The community is really where the members are able to convene and interact with each other and try to anchor and leverage each other's for relationships, for networking, for opportunities and resources. And the network is really where members can enjoy access to a startup and business support and coaching and actual advisory services, access to resources and templates. So we continue to ask our current members to spread the word and try to recruit other new members, founders, and let's say ecosystem players and participants that can benefit our community. And that's really how we are building this, is a community-driven effort where we all are supporting each other and finding ways to help drive our business ideas and our business models and the success of our businesses, right? And kind of all with a hopeful drive towards positive impact in the world, right? In some form or fashion.
Hey, it's Kevin. I can't be there today with you in the VO Weekly. I am going to be working on a project with a team in the Czech Republic. We're preparing for a project that's about to kick off on April 24th. And as I was thinking about missing, because you guys know that I really enjoy us getting to connect every week. And so I'm sorry I'm not there with you. But I saw a couple of quotes. I wanted to make sure I shared them with you. And, well, just with this, I want to talk about a couple of things. Let's talk about this. There was a quote recently about a Russian general that was really ugly towards some of his men. And it really reflected a couple of things that came out. In fact, there was a tweet that in response to that said, you can't fight a free people with a slave army. And one of the ways of creating a free people and freeing people to the next level is to give them the power of entrepreneurship. It's one of the many tools that we have. The other thing that we do is some of you are actually building technologies that make it possible to solve different problems, take care of people's health, things like that. Real exciting, but part of our work together is to help each other get to that next level. And I immediately thought of that when I saw this quote, is you can't fight a free people with a slave army. Part of our work to do together as a community is freeing each other. Each one of us has a responsibility to the community, to each other, to get to the next level. There was a second quote that I thought was really interesting. It comes from Walt Whitman. It was on the fridge. It's a fridge magnet, but there's such wisdom in fridge magnets. I want to share this with you as well. This is what he said. This is what you shall do. Love the earth and sun and the animals. Despise riches. Give alms to everyone that asks. Stand up for the stupid and crazy. Devote your income and labor to others. Hate tyrants. Argue not concerning God. Have patience and indulgence towards the people. Take off your hat to nothing known or unknown, or to any man or number of men. Go freely with the powerful, uneducated persons, and with the young, and with the mothers of families. Read these leaves in the open air every season of every year of your life. Re-examine all that you've been told at school or church or in any book. Dismiss whatever insults your own soul, and your very flesh shall be a great poem and have the richest fluency, not only in its words, but in the silent lines of its lips and face, between the lashes of your eyes, and in every motion and joint of your body. Walt Whitman. The thing that I want to say is our work is to challenge the world to take on all these different challenges and live like this and find the freedom that Walt Whitman is pointing to. With that, it's always an honor to be working with a community of entrepreneurs that are driven by vision and values. Wish I was there with you today, but I'm starting this other work. You're in fully capable hands, in Omar's hands on fundraising. Looking forward to connecting with you some more, and let's go change the world for the better together. Thank you all.
Great words and great quotes and great ideas to keep in mind as we're talking to each other and working through kind of our various initiatives and programs. So I am going to talk today about investment readiness and kind of go through just some high level topics and things and kind of discussion. I want to keep it open, obviously, for everybody to ask questions and get involved in some actual discussion around kind of some of these areas. Whether they're areas of concern or question or just, uncertainty, feel free to, ask me or kind of bring it up. Please don't feel reluctant or hesitant. Just kind of quickly, if you guys know how to use the little raise hand feature on here, anybody in this group currently, trying to raise funding or actively in the fundraising process? Okay, I didn't see anybody raise a hand. So has anybody ever raised funding before or tried to raise funding before and succeeded or failed? Peter?
Hey, Omar, this is Steven. This is Steven here. We haven't started yet, but we do plan on it over the next like 3 months or so. So, but probably like July, August, we're going to start hitting that up.
Okay, great. Okay, good. Yeah, I mean, this is just to get a little bit of a sense of maybe where anybody's had any previous experience around the idea of fundraising or activity of fundraising or is thinking about it. Obviously anybody else, is going to potentially be thinking about it, and maybe that's why you're here and interested in hearing this conversation. Fundraising is just, kind of a necessary part of trying to build a business. It doesn't always have to be thought of as, the going out into the market to raise money from people. It can be also thought as raising funding through your customers, right? And so I just kind of want to start off by the, notion of fundraising, it is not tied to what we necessarily see as kind of the mainstream activities around our industry, around our ecosystems, and kind of the world of startups and building businesses, right? So with that, Jello, can you go ahead and put the presentation first slide up?
This is a good time. I'm just going to say hi really quick I'm still doing we're taking a break on the project with the check. So I'm like, I miss you guys. So I figured I'd just hop in real quick on my iPad. I'm right over here on Microsoft Teams. So you're in really good hands with Omar. And just wanted to say hi. Miss you guys.
Hey,
So,
Kevin. Miss you too.
Yeah. I don't know if y'all got the video I shot this morning. It was kind of rushed. So hopefully so. So
All good.
yeah, thanks Omar for taking care of everyone. And
For sure.
Omar has really got a lot of insight about fundraising. And the cool thing about the fundraising knowledge that he has is he's getting to see it on multiple places in the world. And I think that gives a really interesting perspective. So make sure you grill him with lots of questions about that, because it's an interesting perspective when you're not just seeing it, how it's happening in Austin or Silicon Valley, but multiple locations. So thank you, Omar. And I'll get out of your way and put you back in Omar's super capable hands.
Thank you. Right.
Take care.
So startup investment readiness, right? And, know what it takes to be ready to fundraise. Next slide, please. So the first, I guess, question most people are going to be asking themselves, am I ready to raise funding, right? And what sort of questions and challenges do people come up with in their head? Is how much money should I raise? What is the right form of money or financing for the stage my company is in? How do I get in touch with investors? For the non-traditional finance, professional out there that's starting a business, it's kind of daunting sometimes to think about the world of how to raise money and what it means and where to go. And this is, again, a lot of the first typical questions we get asked, or I get asked, or, folks that are thinking about starting a business and kind of thinking, I need to go raise money. They start kind of in this area. Next slide, please. So the first question I would like anybody to answer, right, when they're starting to think about fundraising is, where are you in this journey, right? And kind of that dictates where you want to be, right, as a next stage, and then kind of correspondingly dictates all of the necessary steps and requirements in a fundraising process. So, this is just a quick kind of graphic. There's 100 of these types of graphics out there that you'll probably see around the stages of funding for startups and businesses. And this is from a financial perspective, how investors think about deploying capital or allocating capital towards businesses. Pre-seed is kind of, you're at the idea stage. You're starting to put your idea into some sort of, tangible fashion. You're putting it on paper. You've scripted something. You've started maybe building something. It depends, obviously, on the kind of business that you're trying to pursue, but this is really where it's the earliest stage, and you're at that level of still figuring things out at a very kind of broad base. Okay, and so there's a certain type of investor that works in this stage, that likes to be involved in this stage, and there's also a certain set of expectations and requirements and kind of processes that you as a business or founder will need to kind of prepare for. And that corresponds with each other's stage. So now if you're at that idea stage, your goal is to get to a seed stage, right? Your goal in a seed stage is to almost have an MVP, some sort of minimal viable product or proof point of your service, right, that you're trying to go into the market with. And you've now gotten it where you can actually start testing, right? And you maybe have even tested already a little bit, and you've figured out some new kind of discoveries, understandings of what it is and what it's going to take for your business to succeed, for your product and your vision to succeed. And so now, again, you're at the seed stage. You're talking to some maybe of the same types of investors that would be at the pre-seed, but also other types of investors that kind of focus more on this stage of a business's life cycle. And there's, again, corresponding requirements, elements, things that are going to be, necessary to be prepared and ready to receive funding, at that stage. Again, going in stage, I like to think of seed and early as kind of the same thing to some degree. Every business is a little different, obviously, and the requirements of that business to succeed and gain traction and kind of get market penetration, time horizons can vary. So, I wouldn't like to kind of place a standard on all businesses that you have to be this amount of time doing these sort of things. But generally speaking, seed stage can last a pretty, long time, and it's still very much early stage. But then you're into, now a Series A, right? And the goal at the Series A is you've gotten a proven business model, and you're starting to need all the resources to go into growing that business. And you really want to get that business now moving in a momentum and an attraction pathway that will get it to that real growth stage, right? Where you're now scaling the business. And that's where at the growth, we call that scaling as another kind of, synonym to it. There's always kind of the interchange between startup and scale up, right? And kind of how that's defined between different industries and stages of businesses as they're growing. But really, that's the drive, right? Is now resources are coming in to help you expand what you've already started, right? And what's now been proven, and you're just trying to keep proving it more and more and kind of put it out more and more to the market, to your consumers or your clients. Exit is really the ultimate kind of, let's say, either final stage or goal of a lot of companies and founders, right? Some founders and business owners don't necessarily have an exit in mind or want to exit their business. And that's completely fine. It's not necessary to have to think in an exit fashion as you build your business. But you need to know that when you're going into building your business, that this is the kind of business I want to continue to run indefinitely, right? And maybe you have your own kind of, again, circumstances. You have a family, you want to hand that business to your kids. And there's a lot of scenarios that exist like that, where, you don't need to think about an exit. And it's not necessary to think in that frame of, target an exit for my business. But again, a lot of people do like the idea of being able to exit a business at a value that's a lot higher than what they started with and kind of how they built the business. And there's definitely a lucrative opportunity for people who are successful that do that. And, there's different types of ways to exit the business and create that kind of what we call material or significant event, right? For a founder and for a management team and a company. So different types of exits exist, like an IPO, like a strategic acquisition, like a merger. And, again, each one has a very kind of unique set of requirements and circumstances. And if you are thinking for your business along the lines of which exit strategies you want to pursue, you will start to position your business, over time to be ready for that and be aligned for that kind of, exit event, right? Any questions so far? Any kind of queries around stages of businesses and funding?
Omar, just want to add a comment. Sometimes I've heard that the concept of a startup is an idea looking for market validation. And as you've said, there are so many different definitions of early stage or seed. And I think what confuses us at the beginning is you hear lots of suggestions that ideas alone can attract funding. And then you hear you've got to have traction. And then you've got to have hockey stick growth. And then you start wondering, well, gee, am I wasting my time putting my pitch deck together at all? Right. So that's kind of where I am.
No, totally understand. And, thank you for bringing that up. And again, I like to think of this whole world of building businesses and raising money, as part of building a business as a mix of art and science, right? And there's elements of, building a business that are very scientific. It's numbers driven, it's data driven, it's process, it's equipment, it's whatever. But there's always a little bit of art in all of this, right? And to your point, Richard, there is many stories of ideas being funded, right? And why does an idea get funded versus a business plan get funded versus a pitch deck, which kind of is a business plan, versus an actual, provable business with attraction and kind of financial statements and things and bank accounts. So it really, again, that's where the art is to some degree, and where what you're trying to do needs to be validated at that stage, right? So ultimately, to get funding from somebody, you're asking somebody to give you their dollars, right? Their pounds, their euros, whatever currency it is, so that you can go build your business. Well, put yourself in their shoes, right? For you to give somebody else money, right? What does it take for you to feel comfortable to do that, right? And there's a certain level, again, depending on your risk tolerance and your financial circumstances, of validation that you're going to be looking for, of real evidence of an opportunity here for future earnings, for future return on the investment that I'm making and the capital that I'm putting. So an idea may have that, right? If it's a really strong idea and it has kind of a very compelling case around how that idea can be deployed and actually, manifested, some investors and sources of money may feel comfortable with that and want to fund it, right? And again, it's not a generality, and I wouldn't say that, again, a lot of this stuff kind of falls into very standard buckets all across the board. It's unique situations mostly where, that can happen, but it does happen, right? What we're going to try to talk about a little bit today is just kind of some of the basics and the fundamentals that most businesses, most kind of business ideas and kind of models will have to prepare themselves and position themselves for, to kind of appeal to the majority, again, of investors out there and sources of money out there, based again on history, based on what's been proven in terms of like best practices. But there's always, again, a little bit of, something else might work. And so, don't, I guess, tie yourself 100% only to like one way of doing something. And that's kind of part of my message here, is that there's normally a few ways to skin the cat, right? And there's some proven pathways and methods that we at Tech Ranch and through Venture Outfitter will help guide entrepreneurs and founders with. But there's the element of art, there's the element of, kind of still human behavior and just kind of tenacity and strength and strategy that still comes into play. And we can always talk about those things and help each other as a community identify those things. And that's where, again, sometimes some really beautiful and amazing stories, happen and come out for entrepreneurs trying to raise money for their company. Does that help answer or kind of clarify a little bit, Richard?
Yeah, it certainly validates many conversations that I've had, and I've also heard that this elusive question, how much money should I be looking for? And I heard one compelling answer, and they said there's only one answer to that question, and that is how you're looking for the amount of money that will get you to the next funding round.
Yeah.
Which is an idea I just was not expecting.
Yeah, and that's why I said before, where you are in your journey, once you determine that and come to terms with where you are, dictates where you're trying to go, right? And it's now the next kind of target for you, or where you're aligning all of your effort and energy and capabilities to get to that next stage. And sometimes there may be stops along that, right? Kind of like sub stops or sub kind of target areas that you're trying to get to, milestones. But really, it's a very linear path, right? And it's pretty clear as a linear path that you have a starting point, that you're building something, you're kind of creating momentum around it, you're attracting all the resources required to keep making it bigger and bigger. And each stage, has its set of, again, defined elements and things that you need to be, aware of and basically dealing with to be prepared for that next stage. So that's absolutely true, and I'm glad that you kind of brought it up as a anecdote in terms of conversations you're having. Again, we're always happy to talk about what that means for you and your business specifically, and kind of your business model and how to kind of think about it. Again, as Kevin mentioned before, it's also a bit different sometimes from place to place, right? So like the way we think about fundraising here in the US and the way that investors look at investing in businesses isn't necessarily the same way it's done in the Middle East or in America or Europe. And there's some elements that are the same because there's the science that you're never going to get away from. There's a P&L statement and a balance sheet for every business, right? And those are very clear, scientific, defined things that we need to know how to manage our business with and through and optimize, right? But there's still ways that people deal with those statements and documents and transactions that are different from place to place. And so there's also kind of different mentalities that go along with when I'm comfortable to put money or kind of to invest the money. So, let's keep going, I guess. We can go back to the slides.
Hi, Omar, before we move on,
Yeah.
on the previous slide, could you give us your best guess on the proportion of TechWrench members distributed in these stages?
Sure. I'll do my best. I'm also more of a recent TechWrench member, and Kevin definitely has the large domain history of kind of all the people that have come through the ecosystem. But if you go back to that last slide, Jello, for a second. I would say today we're looking at probably 40 to 50% of our, members and kind of various parties that are involved in the TechWrench ecosystem at the pre-seed and seed stage. It's a lot of kind of early thinking about what their business is going to do and how their business model is going to work and kind of how to start putting their and what they need to do to be able to start going to market. And going to market is kind of like a big, I would say, like threshold or milestone, as part of the stage of your business, and where TechWrench has, traditionally been very strong in supporting founders and getting to that, point where they go to market and they've now proven their idea can or can't work, or, can work, but just needs to pivot or something, right? There definitely is a lot of other companies, I would say, probably another 25% that are in that early Series A to like growth stage. But I think that the value that TechWrench has been traditionally providing to companies, and especially with the focus in more recent years around international, ecosystems and emerging markets, is, those stage businesses that are actually not based in the US looking to come to the US, right? And so I think we've got Peter here from Hungary with us, and he's an example of that, where his business has now gotten into a later seed stage, almost Series A stage of growth and deployment and validation, and he's looking to expand that business and that business model into new markets, right? And so we are very good here about working with those types of entrepreneurs and identifying the avenues and resources to help support that mission for them to expand and to establish a presence, whether it's here in Austin or in Texas or in the United States, generally speaking. And again, also between other markets and each other, right? So, part of Kevin and I's, philosophy is, creating connectivity between ecosystems and being able to help maximize opportunities of identifying innovation, identifying promising business models, promising teams to deploy in another market that can really benefit off of what that business model or product or service is. So that's a kind of, again, another area of where we're seeing various businesses at different stages or ideas or concepts and kind of trying to marry that. I wouldn't say that we have that many kind of at the exit stage, but we have had, I know, success stories out of TechWrench that have had exits, right? And some of those Kevin can talk about and kind of give some more color around examples of founders and business models and companies that have come through TechWrench and have kind of reached that end of the cycle of an exit that they were, targeting to achieve. Some of them are still going, and they're, they're not necessarily looking for an exit, and they're continuing to grow their business. So, all right, if we can go to the next slide. So what is investment readiness? The way that, I think about it and the way we want to think about it here at Tech Ranch, it's the notion that startups have validated hypotheses around or elements of their business, right? And from that science perspective, again, you have an idea, you want to now prove that that idea can work. So you have basically a hypothesis and you have to start testing that hypothesis. Well, as you start to do that, you'll start to identify, key elements around that idea to allow it to succeed and test those different elements to see what is necessary to take it to the next step or to be able to succeed. The other element is you've identified ways to reduce the risks in launching that business or that product or that idea, right? So as you're defining these key elements of how that product or service can work or that innovation can work in the market or go to the market, you're starting to also identify those risks that you may be facing or that product or service may be facing. And risks are across the board. They could be financial, they could be competitive, they could be macro, they could be micro. So that's, again, part of this journey as you go through these stages where you're really covering what those elements are. And, third, you're basically now prepared and structured in a way to receive investment. So there are, again, financial obligations that a founder will have in terms of responsibility when they receive money from somebody else. And there's certain structures and certain elements of your business that need to be prepared for that, right? So that you don't run into problems later or issues or challenges that are avoidable and also, could end up being the detriment of your business. And there's many stories out there, again, of, great ideas, great management teams that, grew too fast and they didn't structure themselves the right way in time to kind of keep up with the growth or, handle new entrants into the market and being able to kind of withstand the pressure or, macro events, for example, like an economic crisis and how to kind of deal with that. So there's a link here to the checklist, which is the Tech Ranch checklist. I guess, can you click on it, Jello, and see if it opens up here?
I think I have to, because this is a photo, I have to send the link on the chat in a while.
Okay, I can also post it as well. So I'm going to paste here the link to our Tech Ranch investment funding readiness.
Would you share these slides with us?
Checklist. And yeah, I think we could share the slides with everybody after this. And this, so this checklist is, it's the Tech Ranch checklist that we currently use in terms of, helping founders understand where they are in their kind of position to start fundraising. It's not the only checklist and it's not necessarily exhaustive of everything and or every type of business, but it's a great, starting point. And again, you can find online lots of resources around, investment readiness and kind of the steps or the stages that you need to kind of consider. I'll, quickly just kind of give you a high level, it's divided into sections. Are you fundable? And there's elements that define kind of or help define if you are a fundable business. One of those things that I had discussed before is, validation of, your idea or your product, right? So some of these are going to be things that you will that process and develop. Documents, you're going to need to have certain documents in place and ready for investors to look at and evaluate you as an opportunity. Presentation of those documents and the information is also important. As sometimes they say in marketing and stuff, image is everything, right? And so, it goes the same. It's a very much a sales exercise. You are selling your business. You are selling yourself to an investor. So you need to present yourself in certain ways and in certain fashions to kind of appeal to them and show them or demonstrate that you are ready to receive funding or their money and able to kind of execute on that with their capital. The last area of that list includes things like digital, which is, online and digital tools and avenues that are used and supportive in terms of your fundraising and how to get the word out or how to communicate and interact with different investors. Financials, right? And understanding the financials of your business are really, again, a very key core element of being able to raise money for your business, because you will be challenged on that and you will be, asked questions, and the investors will always be doing something called due diligence when they decide that they are serious enough and interested enough to continue exploring putting money in your business. That stage of due diligence is where they really dig in to your business. They dig into the numbers and they start to kind of really ask a lot of questions and challenge a lot of assumptions that you made. If we could go, I guess, back to that slide. So the last bonus I'll talk about in a second, but you can see here this like graphic where it's kind of like a thermometer or barometer, where it's different levels of readiness, right? And, this is a visual way to see where you are and kind of understand where you are in your process. It's not necessarily, again, prescriptive or definitive in terms of like every business and every situation, but it's a good guide and it's a good way to kind of think about what areas of steps you're taking in your business journey and where you've achieved a certain maybe milestone or threshold to be ready for receiving investment. The bonus here that I have is that you have determined your personal thresholds and commitment level, okay? Everything else is fine in terms of, building your business plan, your pitch deck, putting a pitch together, having your financials ready, but are you ready, right? Are you really personally ready to start this journey of fundraising? The reason I say that is because it's not easy, okay? And, building a business is not easy. And if you've already started doing that, you've already started to realize that, and it just continues to get harder, right, in certain ways, and it can get easier in other ways. But it's just not an easy journey. It's not an easy, roadmap, and you are going to face challenges. You're going to face, even walls. Sometimes you're going to get rejected. You may be told no. You have to be ready personally to take that on, right? To be told no, to maybe have your pride scratched a little bit because you were so vested in this idea and in this business, and just nobody so far is convinced, right? Or it's just taking too long and you really need that money to be able to move to that next step of your business plan, but you can't get it, right? So those are those, tough moments in and in fundraising that you just have to be ready. You have to really, challenge yourself and ask yourself if you're ready to do it and be committed. It's we've talked here about entrepreneur resilience and the ability for you to endure the pain that goes through. Kevin and I have both talked about like our past, kind of experiences and something we call scar tissue that, we've gone through and most entrepreneurs end up going through to be able to understand the realities of, succeeding and building a business and kind of getting to these next stages. So that's another area. Again, we are very much supportive in helping, founders and everybody kind of think through and talk through. We'll always be willing to share our experiences and kind of those specific perspectives that we've achieved in the past or have seen in the past to like help. But there's, again, no one way that it works for everybody or one size fits all. And whatever I've been through isn't necessarily what, Kim is going to go through or Steven's going to go through in his journey. We gather as much as we can, right? And just knowledge and understanding and kind of help position ourselves as best as we can. If we can go to the next slide.
I think that's the last slide, Omar.
Oh, that was the last slide. Okay. So, I'll just kind of tie it up from there and say that, investment readiness or the idea of fundraising, I like to say it's kind of similar to the idea of, choosing your career or getting married or having children or, I don't know, buying a house, right? Like, are you ever really ready, right? For any of those things? I mean, you can prepare yourself as much as you want, and there's some fundamentals that we know exist that need to be in place to be able to do any one of those things, but you're still going to have to take a leap, and you're still going to have to be ready to take that leap, and know that you're going to learn in that process and go with it, but just stay committed and persist. And key, if you've got good ideas with good solid fundamentals in your business and your business model and your plan and your traction, everything else can come together with persistence. You just got to keep at it, right? So I'll leave it at that and kind of open it up now to any other like questions or discussion points. Anybody have any other ideas that they want to talk about?
Omar, I've heard the expression is just jump off the cliff and grow your wings on the way down.
Yeah. Yeah, that's a great way to put it, for sure.
And I think the important thing you put your finger on is no matter what the next stage is, no one is ever really ready, and you just have to push yourself through it.
Absolutely. Absolutely agree. And again, I think that the leap, right, is more manageable to some degree with good preparation, and this is what we want to be able to provide our founders and the ecosystem or the world of startups and founders out there, is the lessons learned, the best practices, the resources and guidance to have some of those fundamentals in place, or most of them in place, before you really put yourself at risk with a leap off of a huge cliff versus like a more manageable cliff, right? And again, is it a science? No, not to some degree it is, but there's still a kind of, when is the right moment? You got to ask yourself, and you got to be ready. But timing is everything too. And I can share an example for myself where I started my first company when I was 22 years old, and it was a telemedicine company, okay, in 2001. And I was selling and marketing telemedicine, second opinion services, utilizing technology and distance technology and all this stuff back in 2001. And the idea was great, and everybody loved the idea, but it was just so kind of above everybody's kind of head in terms of, well, how do we do this? Well, do we even have the capability to deploy this, right? The infrastructure, the know-how, the cultural kind of understanding within the organization. And I had to learn over time, and I went out and tried to raise money, and again, I had to learn over time that it's sometimes an issue of timing, that you just need to kind of be at the right time in the market for something to come together and people to really click with it. As we see now, because of the pandemic, telemedicine is very widely understood, very widely adopted, and kind of a thing that nobody really questions anymore. It's just a matter of how do we make the best of it, right? But up until we had the pandemic, there was lots of different telemedicine solutions and programs and products and services that still hadn't really, for the most part, been a widespread understanding. And this is, again, Kevin can probably talk to this as well, where sometimes it just requires some sort of catalyst event for technology to be adopted and understood by the masses, right? And useful. And I think that that's, again, where examples of timing, you just have to do your best and see if you are too ahead of the curve, like I was, right? Well, then do I make a decision to pivot or to stop or to keep going, right? And that keep going may unfortunately lead to you like flying down and your wings never coming up, right? And you end up crashing. Or if you pivot, you may end up developing a smaller set of wings that help you fly for a little bit around something else, right? In some other area. But then can you readdress that other original, idea or plan or pathway and grow the bigger wings? Maybe, maybe not. And that's a part of that, evolution of your journey and kind of resilience and trying to be open to pivoting and positioning yourself and your business to work with the market. Stephen, can I pick on you?
Of course.
So tell me now, where are you in terms of where you feel you are as a stage in getting ready for your fundraising?
So I would say we're waiting to actually actively go out and get investors till we have some traction. And traction to us means maybe 200 users. thereabouts, about 150 to 200 users. So right now we are about maybe a week or so to going to code. So we went through, talked with our developers yesterday. They're going to start coding out our beta. We should have some look to see what that looks like maybe in about a month. And then we have about 20 teachers that will just start kind of doing 2-week sprints with them to say, here you go, test this out, get traction. And we feel that once we get those 20 teachers to absolutely love it, to where it's tweaked to where they have pretty high adaptability rate, then we're going to roll out to 100 and then we already have those additional 100 set aside too. And then with teachers, once they work with something and it they enjoy it, they talk about it. So we have to get it right with those first 20 first before we roll out to the next batch of 100. Once we start to get there, that's where we're going to say, okay, time to go start getting some money. So right now we're back.
So when you say that, again, just to kind of maybe.
Oh, please.
Yeah, go ahead, finish your thought.
No. So right now we're just fundraising locally, people that we know.
Okay. Well, so what I want to ask you is like, the idea about when we get to a certain stage, we're gonna, go fundraising.
Yes.
What is that predicated upon? Like why do you need the money?
So we would need a lot with setting up customer service, with marketing, and with back end support. So like data server, like our money is going to go to data servers, customer service, budget for marketing, and that's where we see like the bulk of our budget being. The development team is going to be more upfront. We have those.
That's again what I wanted to kind of just,
yeah. We have those funds already for the development, and then as we roll out with the initial product, there might be additional add-ons with it too that we would need funds for. But for the initial product, we're set.
Okay, good. And what I wanted to kind of get across with that was that the thought process of you going through validating hypotheses around your business model, right? And identifying through that key elements that need to be addressed. And especially now, as part of this topic, addressed with financial resources, right? So for example, servers, technology, you determine now certain needs, right, for your business to succeed or to operate that will equate to a certain number, right? A certain cost, a certain value that has to be developed around, that whatever it is, technology, let's say.
Correct. Yep.
Right.
Exactly.
This is, I'm, kind of trying to use this as an example of where, right. And kind of, again, another way to think about it is like, sources and uses, right? What are the sources of money or financing or resources that I need for my business to operate, and how am I going to use them? How am I going to deploy them? And from an accounting perspective, we do sources and uses kind of as like a table. It's almost like a T kind of table, and you say like sources on one side, uses on the other, and you start identifying those areas of where money and resources are required and how you're going to get them. Because sometimes, again, that exercise can help you define new locations of resources, right? Maybe non-traditional ways to finance your business. And that's why I'll go back to that first statement I made at the very beginning. Fundraising doesn't mean you have to go to an investor, right? Or a set of investors. You may be able to fundraise for your business through your business.
Right. Yeah. One of the things we talked about
revenue generation. And there's ways to figure that out. Then, ultimately, when you start to raise money from outside investors and bring outside people into your business, you're having to sell portions of your business away to them, right? And so you shrink over time as how much you really own and retain of that business, and others start to kind of gain access and ownership of that. And that may be, again, fine and it works, and you can still make a lot of money if that's your goal, but maybe that's not. Maybe you want you know, if you want to be, you know, sovereign owner of that business, right? So, you know, you can come up with creative ways maybe to generate the resources to grow your business without having to rely necessarily on outside people. And that's just, again, a thought to keep in mind.
Agreed. And I think, you know, when you're building something, you should have an idea of what does that look like in 3 years, right? Do you expect, you know, to exit out of it? Do you want, just like you were saying, do you want to manage that business for a while? Or do you see that being something where you're going to sell it off, you know, in 3 to 5 years?
Yeah.
Doing like financial projections. So we do a 5-year financial projection, and they're projections, right? What we're finding in this journey is that some things that we thought we needed, we don't need, and some things that we didn't think we need definitely more of. And so Hoffman out of LinkedIn, he does blitz scaling, which was is good to read. And he kind of says the same thing, right? It's like when you're scaling up, you're jumping out of an airplane and then trying to find your chute. So it's a matter of just bringing on, you know, how many people are you gonna have to bring on, you know, how much data are you gonna have to store, et cetera.
Yeah.
And you know, is your business gonna pivot, right? You know, I mean, your business could pivot. You could be making a video game, and then all of a sudden you pivot, and all of a sudden you have Slack because of something that you developed within your company just as a communication tool.
Exactly. Yeah. No, agreed. And you know, to the point of financial projections, you know, one of the things I've discovered, you know, working with both my own business cases and with others that I've worked and advised, you know, the exercise of building your financial projection in of itself is a tremendous, you know, way and value driver for understanding your business, right? And it just forces you really to start looking into all these areas of, you know, the business, the needs for the business that you may have not before. And even if you have tried to think about everything, you know, it's still going to force you to kind of dive into areas that you haven't. And so I definitely recommend, you know, even at the earliest stage of an idea, to start thinking about the, you know, the financial projection of that business and how it's going to make money and what it's going to need to make money, and to start diving into those different line items and where you're going to get the data around those line items. Yeah.
But no, agreed. Yeah, we, you know, look at like lifetime value of customer, look at your CAC figure, your MRR for doing a SaaS business. So those are some of the things we've been looking at as well. You know, what's our burn rate?
Yeah, and these are all, again, great, you know, metrics and let's say key performance indicators, right, of maybe your business, specific a set of a lot of businesses, and there's a lot of, again, overlap depending on, you know, internet technology across different industries. There's a wealth of resources and information out there on the net to understand that, you know, when you start thinking about how your business is going to operate and perform, you know, how to define how well it performs, right? And kind of finding, you know, what are those KPIs, what are those metrics that these sorts of businesses are measured against, that investors are going to be interested in knowing, you know, where I stand, so that they are comfortable with where I'm trying to go, right? And what the target is, and kind of how their money is going to come back to them, you know, tenfold if that's their target, right?
Right.
Stephen, how do you feel your product sizes up compared to your competitors in the space?
So we just went through a rebrand for that reason. So, you know, we started off as Terra Classroom, and just recently the product now is Tappy, Tappy. And the reason we went through a rebrand with that, which we're starting to update our website as well, was because a lot of the competitors in the space are very corporate type uptight, and there's very little that is kind of fun, energetic, making it easier on teachers. And we want our company to convey that message to them. So that's why we went through that rebrand. There's competitors that do what we do, but it's very clunky, and the adoption from teachers is limited. So, going through this journey, we did about 800 problem interviews with teachers to find out what they liked about planning and what they didn't like. And the ones that are using current learning management systems, it takes them about an hour to put together a lesson, where we want our experience to be 10 minutes. You tap 2-3 things and you can put together a lesson. It's super easy and it's going to be adoptable. So, there are people that are doing things that are somewhat similar, just not as adoptable.
Right. So you're starting with the customer and working back.
Correct. Bottom up. You got it.
Yeah.
You got it. So, so my business partner, he's been in education for 25 years, and he's kind of, hit the tire where the road hits, done teaching, then administration. He's coached teachers, and so kind of disembedding his knowledge and putting it into this product.
That's great. That's great. And, these are elements, again, like we were talking about before, that are really important. The background and experience of the founder, the relevancy that they have to kind of applying an idea, a product, a service to the market is essentially, important to investors. And, that, again, you just have to validate that and show. Sometimes there's a lot of people with a lot of experience that just, they can't succeed or execute, their idea, and people who don't have the experience, and they figure out ways to do it. But the key is just, can you validate, right? And if you can, then you're going to continue to show a value to, the market and the investor base.
Agreed.
All right. Well, we're at the hour. I have a couple more minutes if we want to talk about something else. If anybody has anything on, top of mind or want to bring up related to this discussion.
Does who does anyone use for, like, something we were experimenting with was on the website have a way where people can, say, sponsor a teacher, sponsor this service for a teacher. They can come in and contribute, and that would be a form of fundraising, right? So anyone have like a payment system that they use or recommend?
It's a great question. I was approached, and I'm supposed to meet with them, I think either today or tomorrow, a company with a platform solution that allows for fundraising from family and friends. And it's a way to allow, non-traditional investors, to be able to access an opportunity and, put money to work, but then also provide, I guess, some interesting solutions around, like, getting their money back through revenue sharing, is through just a dividend or some sort of other kind of return mechanism. And I'll definitely let you know if I find or identify that platform or kind of capability may be utilized or leveraged kind of in the fashion that you were talking about. And I'll keep my eyes open on anything else. There's a lot coming out though. And, the world of fintech in general, and kind of all these different new solutions around moving money around digitally is tremendous, right? And I think that you will find something that can work for what you're trying to do, and you may find a few different versions that you could try to test, right, and kind of work in between and see what works better for your customer experience.
Perfect. Thank you.
All right, guys. Well, Melvin, you have a question or?
Sure, Omar, thanks.
Yeah.
We have money from the nonprofit we need to get to Emmanuel, and is there any solution other than wiring from the bank and giving them some of the money?
Yeah, that's a good question. I think just from my knowledge of international money flows, right, to move money from an account or a location here to a location in Africa, you may still be governed by what sort of infrastructure exists to do that, which is wiring, SWIFT, basically, I don't know if there's some new solutions maybe in the market he's in Africa that have come up that can connect with or kind of tie into other existing platforms here that money can be moved. I mean, one other way that I know exists that's still not, tied down by the, infrastructure and regulations of countries and banking systems is crypto. And, there is ways to kind of move crypto and kind of transfer your dollars, right, in crypto assets into different locations without it having to go through the same sort of banking SWIFT kind of process and fees. But there is still potentially fees doing that. And there's also always risk, right? And you just have to kind of understand what the risk is there, especially from a timing perspective.
Thank you.
Welcome. All right, guys. Well, I think we'll tie it up then. Really glad to have had this opportunity to have this discussion with you all. And, obviously you can always reach out to me through the WhatsApp group, through email, through Mighty Networks. If you're not already in our, venture outfitter community or network, please join. It's a great way for us to continue interacting with each other and driving value towards your, goals and objectives for your business. I'll tie it up there, and good to see you, and we'll see you guys next week.
Thank you.